YouTube, how we doing? Hope you've all had an incredible week. So welcome to another YouTube video. Today's one's educational. Like I said, I'm going to try and always drop some trade source for you all. Question I get asked a lot, how do I trade news? Like high impact news, NFP, CPI, BOE, FOMC, you know, any of the major news events, ECB, you know, whatever. How do I trade them safely? You know, I know back in the day, and people still may do this, and it's not a dig, but you know, people straddle and put buy stop, sell stop, hope it goes the right way, or it's not the way to do it, right? Trading news is the same as making any trade, right? Whether it's you know, a big event or not, trade after the news event. Don't try and predict it, because let's face it, you don't know what's happening. You can read all the news things and all the hearsay you like, but at the end of the day, you don't actually know what's going to happen, and it's not worth the risk to your account if you get slipped. I remember about 5 months ago, we told a lot of people not to trade CPI. They didn't listen, and some people got like 30 pip slippage. One candle was like 90 pips. You do not want that at all. Like, just literally use your head. News is obviously a great way to trade. There's a lot of volatility and volume in the market. We can use that to our advantage, but it's still the same concepts. Look for the same entry models, play off the same things, supply and demand, POI, structure. A lot of the time you can predict where it's going, yes, but wait for the reaction, play the reaction. Going to go through that on this. Going to go through NFP from last month. Well, it's this month's one, sorry. Might do a couple more of these because I wanted to get on the 5 seconds, but the data wouldn't let me get there. Great trade on the 1 minute still. So yeah, that's what today's video is about. Firstly, just want to say a massive thank you to all of you for tuning into the last podcast of Trader's Journey. A much bigger response than I expected, so buzzing for that. I've just recorded the next one. I'm not going to tell you who the guest is, but a lot of you will know who it is. So buzzing for that. That's going to be out next Sunday. And just want to say, obviously, hustle. We've just opened up 150 spaces. We'll be doing it in 50 people increments. If you're not on the waiting list, I know a hell of a lot of you are, and I really appreciate all of you jumping on because the waiting list is big. You don't just get put to the bottom and we forget you. We go through the whole waiting list while we're picking people out. If you fancy it, you want to join, links in the description. I'll put a little thing here for the Hustle Insta, you can see it. Just pop in there, put your name on the waiting list. We'll get back to you if we feel that you fit the community. So yeah, check that out. And obviously before we get into the video, haven't done a slipper flip in a couple of weeks, so figured today's the day. We're going to crack it, we're going to smash it. So let's do it. What we saying? Catching it or not? You know what? I need to back test this. Someone said to me the other day, you need to back test. It's not a bad shout because I don't test this. I don't practice this. Nah. I'm having another go, mate. Not having that. Mugging me off. Ah, Jesus Christ. Come on. We got this. Ah, mate, that was on my foot. Nah, it's just not happening this week, is it? Anyway, video's next. Peace and love, gang. What's going on, everyone? How we doing? So, obviously going to cover, you know, how to trade high impact news. Please understand, not financial advice. No. So, big no. All right, not financial advice. Get some data on this, test it. Don't just go in guns blazing. Obviously, if you have funded accounts, you can't, you know, check your rules. Obviously, with FTMO, it's got to be 2 minutes either side. It's probably not worth the risk unless you have something set to tell you it's been 2 minutes or whatever. I'll be honest, like, you're losing the account, it just ain't worth it. Whenever I've done this, I do it on the Percy because I can take the hit. It doesn't matter. Do you know what I mean? So I just want to go over what I'm going to do. I'm going to do a couple of these on different news events, but usually I would use the 5 seconds to get involved. Obviously, with the data, I can't always access it. You get like a week's worth. So I want to cover last month's NFP. Well, actually, sorry. It was kind of like this month, I guess. Yeah, it was January. It was like January the 7th. I just want to cover it, how you could have planned the trade and what you would do before a news event. Hopefully it gives you guys an insight into how you trade it, because everyone's very scared. They're like, oh my God, news. Oh my God. Look, someone said to me, I can't remember who it was, but you know, volatility is a product of the available liquidity. And it's true, when news happens, there's a lot of volume in the market, which means there's a lot of liquidity, which means as a trader, we can target liquidity if we understand what's happening, right? So essentially, what we're doing is you would trade just like you trade normally, right? Everyone thinks that news is like some specific thing. You're going to see how I'm literally going to do the same thing, supply and demand concepts with everything else that we talk about, and how you can utilize it to your advantage. Simple as that. So if we look at this on EU, right, 4 hour, okay, we've just broken the high, we've had a pullback, and if we look here, we've had mitigation of these sell to buy wicks, right? We've come in, we've had one mitigation, we've had a second mitigation, that has held. There's something here on a lower time frame. I'm not going to go and find it right now. Right, and then obviously we've had this has come up here. We've had this react off of that. Again, first mitigation gets run, but still holds. The POI holds essentially, right? So essentially we're seeing, bullish order flow. We've broken a 4 hour high. Expectation, realistically would be we'll print a higher low and we'll take out this. So we could be looking for longs for sure. We have already had an attempt once. It's reacted here, but it's come back and it's pulled back into this sell to buy candle here. So we could see us push and take out this high, right? So I'm like, all right, could see longs. Cool. Now let's kind of try and compare that with the 15-minute, right? See what that's saying. So if I mark that up there, H4 demand, right? Drop to the 15. Again, on the 15-minute, we can see that we've come into this 4 hour here. And then once we've come into this bad boy, we've played out of this wick, right? First low got run, second mitigation holds. Then what happens, right? So now we start marking it up. So we get our M15 chock down, M15 chock up, right? So we've had our change of character, right? So essentially we've realigned with order flow as well as structure, right? So we can say, right, you know what? We could see bullish intentions come into the market. Obviously then what have we done? Well, we've mitigated what caused the shock here. That mitigated that. And then from here, if I just do this, we have left this unmitigated wick there, which has also taken out these lows. So we've had a sweep of liquidity, sweep. So taking out these lows, right, and we can see that we've had a reaction to the left from this kind of range. So what we're saying is, right, essentially, is, from the left on the 4 hour, bullish order flow is holding, bullish structure is holding. We've realigned bullish here, right? We've had another mitigation. We've continued bullish, right? We have this sell, this wick, which essentially is this sweep here. Right now, in theory, right, this failed to create a new low, so it's likely going to become liquidity, likely going to get run. So with that in mind, it's a case of, right, what can NFP do? Well, we have this unmitigated level. Likely, we're going to use this as inducement, right, for this mitigation. And then we could see moon prices, or what we could do is we could obviously use this as inducement, mitigate this, and then see hell, right? Because of course we're building liquidity underneath to target. But at the same time, from a structural standpoint, longs make sense, right? So, oh, I've lost my mouse. Where's it gone? It's on my other screen, hang on. There we go. Yeah, cool. So obviously now, when we're looking at this, it's a classic case of, right, okay, so what do we think will happen? The key with trading news is let the news drop. Don't be trying to do some madness where you're like, yeah, setting a limit off this, mate. Sound, 100 lots, we're going short. Because when it slips you, you're going to cry like a bitch, right? There's no need to try and catch it before it happens. If you're in a trade and you're well positioned, sweet. Again, if you're on funded accounts, get out. There's no point trying to take your stop loss off to try and, imagine, right, let's just say you're in this long on your funded account and we do this. It don't matter, bro, if you're break even or not, you're going to trigger it, likely going to violate the rules. And if you go, I'll take my stop off, what if it goes to hell and you took your stop off here? Blown your account, mate. Like, done. Get in the bin. So, like, there's no need to be dumb, right? This is one thing you need to remember. Just because there's an option of liquidity and volatility doesn't mean, I'm going to be a knobhead and just do stupid things, right? So remember that and think, right, I want to play the reaction. The key to it is reaction. So let the news drop and then wait for the reaction and play it just like you would a normal trade, because the initial news has happened, right? Just play from it. Don't get me wrong, sometimes it's really messy. You can't get in. It is what it is. So if we play this on, right, we'll come up to NFP. This is how I'd have it. I'd have the high there with the supply. I'd have the demand level there. I wouldn't personally be marking any of these. I'd see them as inducement for this. I'd be aware that we could just run lower, and there are some occasions where I just won't get involved. I'm like, you know what, it's not even worth it. It hasn't set up, right? In this instance, right, so obviously it plays in one candle. So basically, it ran into this high first, right? So if we go on the 1M, you'll see how obviously pushed up, ran into this high. Now, if I was playing, if I could get onto the 5 seconds, which I can't, I would look at here, I'd be looking for shorts. And the minute we built up some kind of structure and we started taking out levels of demand and seeing supply in control, I'd start to look for shorts, right? But at this point, I'll be honest, it literally just sank, okay? Now, the key here is be on the ball and be watching, because now we're on the 1 minute, right? Let's say we're not able to use the 5 seconds. You might not have premium or whatever. You don't want to use it. Fine. If you did, you could look to get involved here, right? It's ran straight into our POI. So the initial reaction took out the high liquidity and built more liquidity. Then we ran the lows, took out more liquidity, and we've had a mitigation of a demand level that makes sense structurally, right? From a bullish perspective, structurally, it makes sense. So now all we want to do is wait for our entry model. And if we get our entry model, we get involved, right? So simple as we come in, right? And we've taken out this low, we've run into this, right? So you could be like, oh, you know, the high I need to see goes like up here, that's miles away, not sure what to do, blah, 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 right? Let it play on a little bit. Right, well then the high gets pinged, okay? And in the process of that happening, we had a flip. Obviously the candles are a lot larger. We had a flip here. Why is it a flip? Well, this supply put in a new low, price came back, mitigated it, tried to put in a new low, failed to break the low, and then from here we flip, right? So you could quite comfortably go, oh, actually, you know, there's a flip's happened here. Now where do we want to enter in? Well, realistically, you've got this guy. This is responsible, because what happened after that is we had another mitigation. We tried to mitigate again. Here, we mitigate side this wick, had a mitigation, failed to take out any lows, pushed, completed our change of character, right? So from here, we could safely say this is the level we want to get involved in. Right now, obviously I trade with like a pip stop usually. Yeah, that ain't gonna work. I'm not gonna do that, right? So you'd be looking at trading realistically to be safe. You want to be below that wick, right? Now again, what I would do here is I would wait to come in, get a mitigation, get my entry model again, getting on the 5 seconds, and then get my smaller stop, right? If that's not an option, and you're not someone that's that bothered by stops, which I'm gonna be honest with you, man, 5 pips is not big at all, right? I remember when I was trading with like 20 pip stop losses, 30 pip stop losses. We've all been there. Some of you still there. Not a dig, just saying, right? You could say I'm going to play the EQ, you know, and you sort of go 3 pips, 2.5 pips. Yeah, great, massive for the RR. You know, just to take out the NFP high, you're talking 1 to 9, right? There's a chance it may not come back into the EQ, and that happens. Sometimes you can pay the 25%. So you could go, right, I want to play the 25% of this. And you could enter here, and what it does is a lot of the time you'll get a mitigation of 25%. I've covered this before, and then your stock goes below the low. You've reduced it by a pip. Happy days, right? Remember, this trade in theory should take out this high. So if we pull this across, you're talking a 22-hour trade. Now, of course, it's the weekend. You might not want to hold it, whatever. But you understand, right? Like that you can trade the news. This, if I didn't say this has been a news event, right? I'm gonna move that because that is horrific. You just think, oh, it's just price action. Like, it's the same stuff, it's just on a larger scale of candle. If I rubbed out the time frame of the 1 minute and put 5 second, it'd be the same. If I rubbed out the 15 minute and put 4 hour, it's the same, right? It's always the same stuff. So from here, you could literally go like this. And like I say, I can't go on the lower time frame for the data. And you could go, right, I'm gonna go 4 pips. And you know what, it's Friday, I'm gonna target the highs, 5.5 hour, whatever, sweet. You could wait for it to confirm another lower high and trade out of that, but you know, let's see what happens. Right, we get tagged, and then obviously from here, right, we've had the mitigation, right? You could say, right, we took the low out, we've taken the high. You could then look for a re-entry off this doji if it gives you one, but there's times where by now it's just going to get going, right? It's going to reverse, it's going to go to the moon. So see what happens, and yeah, it doesn't come back, right? But you can see how literally the same thing that I've put on all the other videos that I've made. If you haven't watched them, get down in the channel and have a look. It's free material. Like, I've made a video on how much I make on YouTube. It's not for making money on YouTube. It's generally to help. That's what we're all about. And obviously, as you can see here, you get tagged in, right? Nice little entry, 5.5% to the high. And you could go, you know what? Actually, this, like I say, this makes sense to the 4 hour. I'm on my personal account here. I'm going to hold this to the high. And, you know, all you got to do is monitor it. And before spread hours, you could go, I'll probably close it. Right? So, what do we get? So let's say you closed it here, right, at 16 16%. Obviously, you know, you might have just shut it. If you're on a 15 minute, you might have seen it pull up to here and gone. Just move that over. Where is it? There. You might have seen it up here. It would have been what, 8 o'clock, and you might have gone, oh, I don't want to hold this. You know, I've done 64 pips, done 16%. I'm gonna get out, right? And you can close it. I'm not just picking that point. You might have just closed it here, right? You might have closed it up here. It's down to you. You might still be in it, and you might go, nah, you know what? I think we're all good in the hood, right? Obviously, Monday comes, we get taken out, right? It sweeps these lows. It comes down in for a second mitigation, and I believe we go and run the high. Yeah, you get the drift, right? We're going, eventually we take out the highs, right? There. So, all right, you know, you had your trade idea. Oh, we were unlucky, we got run. I'm not one really to hold trades over the weekend. It's something I'm looking into as the year develops. Certain positions, when I'm positioned well enough, it's worth holding. But like I say, you always have to have an exit plan. And you know, personally, what we do is we won't just hold full volume. We might partial at levels that we feel could give us a reaction. So, you know, when we take out a high, usually you can get a pullback. What we would say is, right here, take 50%, lock 50% in, you've banked some money. You know, you take out this high, oh, lock in some more. Like, it depends on how you want to trade it, right? Yes, that reduces your RR a little bit, but it also ensures that you're always extracting from the market. And I don't think enough people do that. I think everybody gets in and just goes going to the moon or it's going to hell. And yeah, if you have the correct understanding, for sure it can. But especially when you're just starting out, when you're growing, when you're building and developing into the trading world and trying to be consistent and just extract from the market, it's important that you aren't just giving everything back. Because, not going to lie, if you're 16% up, right, it's a chunk, yeah? To take a B after that or even a loss, madness. Like, at least get something off, right? So, like I said, if I could have, I would have gone back and done the data on the 5 seconds. I can't. This is today. My bad. I've just lost everything now. Here. So if I could have, I would have gone back and gone on the seconds because there was a real nice seconds entry here. And obviously with a 1 pip stop, the RR was bonkers. Not that you have to do that. This is still an incredible trade. And you can see if we just cut it. Where's my finger gone? If we just cut it back here, you can see on the 1 minute, really nice entry, right? You get in here, and like I said, you could have just took the open, and you don't have to take that. Sometimes you'll miss that. Test it, see what works best for you. 25%, 50%, open. You do what you got to do, right? Here's the reaction. It fails. We get a nice change of character after a liquidation. Bosh, see that, mate. You've made art. But do you see how you can still trade? Everyone's like, oh my god, it's NFP, or you're trying to do straddling shit. Like, people will put a buy, you know, before the news drops, I'm gonna put a buy stop and a sell stop. Yeah, I'm cool. Yeah, it looks cool, mate. Sweet, nice one. Cheers. Like, what is the point in trading like that? Like, if you're going to trade like that, don't trade in it. It's just stupid. If you're going to try and guess the news, stop being a melt. Like, it's not sustainable. You might get the odd event where you know, you're like, oh, yeah, look, it's going short. Yeah, sick, mate. Yeah. Oh, it reversed. Fuck. Like, just don't be stupid for the sake of trying to make R or pips or whatever you want to call it. Just, all this is my entry model. Like, if I was trading a normal day without the news and it come into this, I would have looked for the exact same thing. 1 minute chock and flip. Off we go, mate, because it's aligned with structure. Structure's king. We talk about it all the time at Hustle. So, you know, really ensure you're understanding structure and what actually the market's doing. All these other fancy things people talk about, it's brilliant, but it's confluence. It's not the be all and end all. Structure is truly, it can get you on the right side of the market a hell of a lot. And if you're on the right side of the market, then you just have to refine the little bits like entries and all that jazz, right? But yeah, that's 15 minutes, yeah. You know, with the intro, probably be a 20-minute video. I hope there's some value in that for you guys. I know I'm trying to deliver, like I said to you before, a bit of education. The podcast which started, just want to say a massive shout out to all of you for the feedback on that. Actually doing by now I will have recorded the next one, so that will be coming out next Sunday. And you know, I want to try and deliver a little bit of live trading stuff and just have fun with it. I'm still trying to get to grips with live trading and recording it. I'm not gonna lie. By the time I get the tripod out, the mic out, that's the last thing on my mind, man. I'm more about like, yo, I need to be getting my trades. So I will try my best for that. I know a lot of you have asked for it. But yeah, hopefully this helps. I know it's not a topic many of you probably look at that much because you're probably like, meh, whatevs, like it's just a news trade, or I'm not bothered, I don't want to trade the news. And if you don't want to trade it and you want to protect your capital, brilliant. I'm not saying you should. But if you're someone that's at the charts and wonders why and how it works, I could have got in it. This is just a video to show you, like, if you wait for the reaction and you play the reaction, you'll be golden. Of course, it's not. I'm not saying it's some 100% thing. You're going to get it wrong still. It could have chocked, flipped, and smashed my ass. Like, it's just how it goes, yeah. But it's about probabilities, right? Executing the edge over and over again. And yeah, I mean, to be able to pull out, you know, a 1 to 16 or whatever, or a 1 to 10, or even a 1 to 5 if you just targeted the supply, it is still incredible. Don't forget that. Everyone gets a little bit carried away sometimes, you know. That's still a great trade. And like I say, that trade, I remember it on the 5 seconds. The RR was like, I think even to the high, it was like 1 to 25 or something like that. Huge. And there was a lot more detail on the seconds. It was a real nice setup, but I can't get there. But like I say, what I will do is I'll do like a part 2 of like the news trading if you guys want, and I'll try and show like an actual seconds, you know, how you do it. Maybe I'll try and record the next news event. I don't know. We'll see. See how I feel. But yeah, I hope you all have a wicked weekend. Appreciate you all watching. As always, please just, you know, like, subscribe. We're getting closer to 10k. I'm buzzing at how quick the channel's grown. I think sometimes I have to ground myself a little bit and go like, yo, you've grown rapid for a YouTube channel. So I'm blessed and I appreciate you all. If we can just start, you know, like, share, subscribing, get it out there a little bit. There's a lot of value on the channel, I think. And I've had a lot of messages from many of you from different parts of the world that have said, you know, the channel's helped you massively, which truly is like amazingly, it humbles me massively. So if we could just continue to do that, it'd be great. Hope you all have a great week. Hope you keep smashing it. Catch you in the next one. Peace and love, gang.